All right, so I want to talk about always in this whole concept of trading in the direction of the breakout, and really just a really strong consideration for what the market cycle is, where you place your stops, and how you take your trades accordingly. Um, Recently, I had been struggling trying to make good trades, and sometimes second guessing myself. I remember this is the spy. I remember I took a trade. Um, I took a trade here, and I remember when this was all forming. It all looks so confusing. In fact, I'm just gonna do a little replay. Imagine this has not happened, and at the time, I was a bit confused. I thought, okay, we have a lot of selling here. We're probably going to get some more selling here. And then what ended up happening was, let me just see if I can find, here we go. Yeah, what ended up happening was the price now retraced. I thought, okay, we didn't get, maybe we'll get a double top. We got the double top, but we crossed that high, and then we came down. And as you can see, it looks really confusing. I could not understand what was going on at the time, could not see a pattern. And I think what had happened was I completely forgot about the market cycle. As you can see, what's actually happening is you have a spike, then you have a pullback here. This is the first time a bar has gone below any bars here. I don't think this is a pullback. Yeah, I'm not going to take that as a pullback. And then normally when you have a pullback, you have a channel. And the channel, normally you get 3 pushes, which forms a wedge. And I had not considered or even looked into that possibility. And as you can see, we had a double bottom. I know it makes it, I'm going to take this out because I think this is cheating. So at the time, it was I obviously did not know what was going on, did not see this as 2 highs. I actually thought this was a wedge, this, and this. And so was expecting price to go even lower because of that. But actually what ended up happening was it just went even higher. It went down, it went high, and it just got so confusing. And I just kind of let it play out. And I was taking some really bad trades in the process. Then we now had this bull breakout. And I thought, okay, maybe we're in a trading range here. And lots of confusion. Then I noticed we had 1 pullback, 2. And I thought, we may get a 3rd, but I'm not sure because this is a high. And that's all I was thinking, high. This is also the high. So maybe I'll place my stop there, or I would go short here. I'll go short below. And this is another thing. I did not even look at the triggers. I was just going short regardless. I think I went short there. And as you can see, would have been stopped out. And I thought, okay, that. Then I saw that bull bar, and I thought, oh, we have a wedge fill. 1, 2, 3. Maybe we're going for a measured move. So maybe what's actually happening is we're going for something like this, right? And then I just saw that happen. And at this point I thought, oh shit, we probably have a wedge top. And I thought, did we break out? Are we going higher? Do we, what is happening? Was this the major trend reversal? I first shorted here. Then I got out when we got here. I was really, really confused. And then I saw a bear bar. And I thought, maybe I'll go short again. So got a short in below a bear bar. But at this point, I had already lost so much by all the different trades I'd taken over here. Taking this trade here, place my stop. And that was another thing I was confused where to place stops. I'd taken trades in different directions, really confused about where to place stops, and put an entry here, and just really had no confidence. Because if you think about it, we have a wedge here, and we have a wedge here. 1, 2, 3. Even though this is formed that, but then we've broken this high, chances are bears would sell this high because of all this selling. Let's see what happens. And then we started going down. I thought, okay, great. Maybe they're going to have a channel here. Maybe a wedge will fill. Let's see what happens. Just started going down. I thought, oh, wow. So now we have a channel. And where is the, here we go. Now we formed this channel. maybe it's this. And in fact, it's not drawn properly. I mean, this should really touch here, but we formed this channel and then we tested the bottom. And I thought, okay, what's going to happen here? And I think at this point I got out and I said, okay, if we have this, we should get a second leg. But what if it fails and we go back up from another measured move? And maybe this is a breakout. Now, I'm saying all these things, and it's funny, we had a wedge top here, and then we sold, and then went down, and it became always in short. Now, I'm saying all these things because when all this was happening, I remember I took this, I'd already lost a bit of money. I said, wow, if I had just waited for this. But it was just because in my head, I was trying to find a trade and just get in at any point without seeing any setups. I fully had not understood what was going on, what the market was doing. I saw this and I thought, oh, maybe we're going to form a bear flag. And I stop here because the reason why I'm doing this video is because of the element of confusion that sets in when you're trying to take a trade. And really, the best times to take a trade is whenever you have a breakout. Always wait for the breakout. You could say what's happening here isn't it's not a breakout. Actually, this is a special case, and we'll talk about this later. But this breakout is what sets the tone for this. If you think about it, always consider the market cycle. The market cycle is such that every trend, because you're always trading the trend, because that's where you make money. Every trend starts with a breakout. This is the breakout. This is a breakout for something. As you can see, I've drawn this for something else, but this is a breakout. And then once you have the breakout, the first thing that happens after the breakout has ended, you have a pullback, and this starts the channel phase. As you can see, the channel phase does this, and usually you get 3 pushes. So 1, 2, and 3. Okay, 1, 2, 3. And I had not fully considered and understood what was going on, and I hadn't considered the market cycle. So when I was taking my trades, the first thing I need to ask myself is, what are we, and what direction are we trading in? And what is the always in direction, long or short? So right now for this is always in short. So therefore you could take trades here, but your stop is here. If you're taking always in long, your stop is here. It always depends on what started the always in direction. If you're always in long, where did it start? Here. Always in short, where did it start? Here. In which case, you now make your decisions to trade in the always in direction based on that stop. So here, we're always in short. So technically, I guess you could put your stop here because this is a bear breakout. And as you can see, when price went down, we went down 1, pullback 2, pullback maybe 3. Yeah, and then we go sideways. Then, yeah, third leg down. And then we now go up. One could say you're not always in long, but I still think we're always in short. Why? Because I think this is still the trend down. This is one leg. This is the spike. It's the pullback. And it's now a broader channel. Then we form a wedge top. 1, pullback 2, pullback 3. There we go. That's the wedge. 1, 2, 3. But we don't take this high out. And then we're going for the second leg. So this is the first leg, second leg. And we break that low. Perfect. And now, the key is understanding that price is always in a channel. Spike, pullback, channel. Spike, pullback, channel. And this also helped me on Friday. When the market opened, we pulled back again. And if you notice, we went up. I actually took this trade up, but I hadn't even considered what was going on. at this point, and then I realized when we started to sell off here, I thought, oh my god, there's a lot of selling. I actually considered taking it short here, and I was hesitant because I thought we were going higher. I thought this was a major trend reversal of this, but I had not even considered that this was a spike pullback, and this is the channel. So of course this went down and formed this wedge. 1 pullback, 2 pullback, 3 legs down, and as a result we now had the base of this channel. And look at that. And that was what confused me to then here. And also, I just had not considered the fact that it was later on when I was thinking about it during the day, I thought, we have this, and we haven't got our second leg, or at least this is a spike, this is a pullback. We should have 3 legs down, at least some form of a second leg, maybe this, or maybe something else, like we have here. Spike, pullback, channel. We're doing the reverse. Anyway, so what I decided to do was to share some notes with my colleague, which when I said it can be confusing, but you should always trade in the always in direction with your stop here. What I should have done was, if I had known this was the always in direction and we're channeling like this, just kept my stop here and bought above bull bars. Because I know, fine, you put your stop here, you buy above that bull bar, you can buy above that one, buy above that one, because the trend is always in long, and you have a higher chance of making money because you're always in long. And noticing this here, always in short, buying below bear bars, here, 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 here. This is the next session, next day. This is the always in direction. Therefore, seeing this wedge top, could have sold below this bear bar. This is okay to sell, but this is a high probability sell. Stop could be here. I'm not very comfortable putting my stop here, but stop could be here, or even here. I'm not even sure yet. I mean, it worked out, so you could put your stop here, I guess. You're always in shorts, because this is not a breakout yet. This is where it becomes a breakout. It's where you leave your stop. This is the last breakout. Got it. Yes, so this is so stop definitely here, breakout, and therefore, if you are taking the always in, but then look, we have a bull breakout. Channel's broken now. Maybe this is where you've broken out of here. Stop here. I would normally go long here, but then where would you place your stop here? You could if you want, but this is risky because you don't know what's going to happen. It could go up and come back down, and then you now have that, and then before it goes back in. Anyway, thought I'd just record this just to kind of talk about, again, this whole idea of always in. And what's interesting is we've not actually gone up, because now we've broken out, pulling back 1, 2, 3, maybe another leg up to test this top. But yeah, the always in direction is always the direction of the highest probability and the direction you should be taking your trades, and how you should be trading for good, for your high probability trades. I think that's pretty much what I wanted to say, and how you decide. All right.